Hello and welcome, it's Strategos again here, and I'm going to do something very slightly different today. I am going to keep on with my Galactic Civilizations 3 playthrough, but I'm going to upload a video that I uploaded last year, in fact, when I was thinking about doing a channel devoted to cryptocurrency. And I did this video just before there was a huge boom in cryptocurrency, and it was a video called "What is the rational case for cryptocurrency speculation and investment?" And I just thought I would share it with you. I think a lot of it still applies today, but unfortunately my prophecy in this video kind of came true, and there was a huge, in fact gigantic boom into cryptocurrency, which sent the price of Bitcoin to $20,000. So the compelling case for cryptocurrency investment isn't as strong today as it was back when I made this video on this alternative channel called Crypto Strategos. But I still think some of the basics are still sound even now, so I just thought I'd share this with you, and normal service will resume shortly. So without further ado, here's that video I made. What is the rational case for cryptocurrency speculation and investment? Obviously there's been a huge buzz around cryptocurrency in the media recently, and I've been investing in it and trading since 2008. And I really want to try and explore what is the rational basis for investing in this asset class. To make this argument, I've decided to frame it against some of the objections I've heard from certain professional financial advisors, including on this website. Using the perspective of the financial advice industry can clarify what the genuine arguments against cryptocurrency as an investment are, but also why such people might ultimately be wrong. Professional financial advisors love stocks. Stocks are the go-to asset, and in general, they suggest that their customers' portfolios be heavily weighted towards stocks. It's not that financial advisors are mindlessly shoveling their clients into stocks. Far from it, there is a great deal of complexity involved. Financial advisors are great at picking stocks, splitting a portfolio over the various kinds of stocks, and rotating the investment allocation across the span of a cycle. The services of the financial advice industry are sophisticated and complex. Nevertheless, they are highly weighted towards stocks. This changes as a person approaches retirement. A financial advisor will typically recommend divesting from stocks and moving into fixed income products due to a need for lower risk towards the end of the lifespan. In general, however, stocks are clearly the bread and butter of the financial investment industry. What, then, is a mainstream financial advisor to think of cryptocurrency? Well, the first thing they notice, straight off the bat, is that cryptocurrency doesn't pay any dividends. Financial advisors are trained to appreciate capital growth and income yield in investments, and crypto only has capital growth. This is a very bad start for the financial advisor. If there is only the hope of capital growth, then crypto, to them, looks rather like gold, which also has no yield. It looks like something to hedge against inflation and currency depreciation. It looks like it's performing the same function as gold, or to be some alternative to gold. Clearly that's not a very good start, as far as the mainstream financial advisors are concerned. Crypto from this point of view looks more like a hedge against some doomsday scenario than a potentially profitable investment. So we're off to a bad start. But what about all of these people who are now screaming all over the internet about how they made their fortunes on cryptocurrency? What about all the people who bought in early and are screaming about the insane profits they have made? Thousands of percentage points. Can financial advisors really dismiss this kind of testimony? Well, yes, they can, and quite rationally. Just because something is subject to a bubble doesn't mean it's a good investment. The classic comparison here is with the great classic Dutch tulip mania. I was over in Amsterdam a while ago, and there are some fantastic museums dedicated to that heady time. Traders in tulips made insane profits, at least until the bubble burst. Those who made their fortune could crow about how great their investment was, but they were just in the right place at the right time. Besides which, even more people went broke as the bubble burst. Crowing about being on the right side of a great bubble is roughly equivalent to bragging about winning the lottery. You were just lucky. It didn't mean that tulip bulbs were a great investment in any existential sense. They're just a flower, and having looked out with cryptocurrency investment in a bubble does not mean that cryptocurrency is a good investment. In any case, it is not as though equity investors have nothing to crow about themselves. On the contrary, most have done phenomenally well. The stock market has performed amazingly since the crash of 2008, somewhat in contrast to the rest of the economy. Volatility is low and tech stocks keep reaching for higher highs. Therefore, when mainstream financial advisors and analysts criticize cryptocurrency investment, they are generally doing so from a position of reasonable strength, having done very well with their own investment. They may not have had the 1,000 percentage point returns of some crypto investors, but they've done very well, thank you. It is also often argued that cryptocurrency has no intrinsic value, a bad thing for an investment. Gold has properties which make it suitable for use as money, first identified by Aristotle, portable, divisible, and so on. Stocks represent membership and ownership of a company, and to be legally entitled to a share of its profits. Cryptocurrency, this argument goes, has no intrinsic value, and so should not be considered a good long-term investment. So that's basically the mainstream financial perspective. And despite an uptick in interest in cryptocurrency investment, these arguments have some merit. But there's an important factor that's not considered. I'm now going to explain why there is indeed a rational case for cryptocurrency investment. To understand the rational basis for cryptocurrency investment, you have to zoom out a bit. In fact, way out. The early 1970s saw a seismic change in global finance. The post-war global monetary system, the Bretton Woods system, in which the currencies of Europe were linked to the dollar, and the dollar was backed by gold, ended. The United States moved to a pure fiat currency. The implications of this have been absolutely monumental, and we need not deal with all of them. What we are interested in is a very simple observation. The existential change in the global monetary system during the early 1970s, combined with more recent extreme interventionist monetary policies, have created what has been called the era of bubble finance, or the everything bubble. While Labour has had very little to smile about over the last 30 to 40 years, asset holders have made off like bandits. What has been pumped? Well, what hasn't? House prices have soared into the stratosphere. Even though they crashed in many places through the West, they are arguably now back in a bubble. Equities too have been pumped up by easy money and central bank intervention. A lot of mainstream financial advisors get defensive about the idea that equities are in a bubble, but obviously they are. Their prices are becoming ever more detached from earnings and are inflated by buybacks using cheap central bank money. If everything is massively inflated, if there is an everything bubble driven by massive central bank intervention over the last 30 years, then why is that a case for investing in cryptocurrency? After all, cryptocurrency is in a bubble of its own, especially now with prices being hugely inflated. Surely crypto is just another bubbly asset, right? Well, there's one crucial difference between the cryptocurrency market and these other bubble markets, and it's the difference that critics of cryptocurrency investing don't always seem to get, and it's the difference that's helping to make cryptocurrency investors and traders rich. And the difference is the overall size of the market. The total cryptocurrency market is only around $100 billion. That is shockingly modest compared to most other asset classes, and that is even despite the recent bubble in cryptocurrency. As a recent Zero Hedge article pointed out, Bitcoin's share of that, 41 billion, is the net worth of Larry Page, the co-founder of Google. Amazon is valued at a total of 402 billion, and Apple at 730 billion. These comparisons are fun, but crucially, the total market cap for gold is around 8.2 trillion. This is where you really start to see the potential of cryptocurrency. Cryptocurrency performs a similar function to gold, but the total invested in cryptocurrency, even after the recent bubble, is not even in the same universe. The total value of global stock markets? You're talking 66.8 trillion. Cryptocurrency, even having been pumped up a great deal recently, is not even in the same universe as these asset classes. You have to ask yourself, if bubbles burst in all these asset classes, where will all that capital go? Is there not a case that as cryptocurrency proves its more mainstream credentials, that a lot of capital can flow from these gigantically bigger asset classes into cryptocurrency? This is the real case, the real rational case for cryptocurrency investment. In an era of bubble finance, virtually all asset classes are pumped into an entirely ridiculous degree. Cryptocurrency, while certainly pumped up in a dramatic way from its extremely humble and extremely recent origins, is still a very small market in comparison. There is therefore good potential for capital to flow in as people divest from these other asset classes. We've seen that more than once in crypto, and I doubt it'll be the last time until the technology matures and the markets really mature. So that then is the real rational basis for cryptocurrency investment. I hope you've enjoyed this video, and please feel free to leave ratings and comments. Thanks for listening.